Now what?
What does it say?
Just says live.
I need to do this off of Facebook.
Okay, so I go onto my Facebook. Should I just press go live everywhere?
What about here?
Where?
The second tab.
Okay.
Okay, so now you're live, but give me about 2 minutes to do some marketing, all right?
Okay. Okay.
2 minutes.
Okay. Okay, starting. Okay, hello everybody. It's January 16th, 2019. A lot of volatility in the markets, as everybody can see. So there's been a lot of opportunities, and we've taken advantage of a few of them. So let's just talk about a few things that are going on. I don't know if you guys have heard of anything, but it's called the Martin's Week Indicator, and it says the breadth thrust indicator was created by the late Martin Zwing of Wall Street Week. And basically the formula signal, the gist of it is it gives a buy signal when the New York Stock Exchange breadth goes from heavily negative to heavily positive over a short period of time. Its purpose was to signal that everybody's back in the pool after a bear market, where investors stampede back into equities, and is absolutely a fantastic track record since the credit crisis. For example, since 2000, it has given 4 signals, with 3 of the 4 coming at near the end of a secular or cyclical bear markets, with an average 12-month return of 23% for the S&P 500. This is important because this indicator just gave us its first buy signal since 2015. Okay, so the bottom line is, this is a pretty big indicator. It doesn't happen too often. It's had 4 signals since 2000, and it's given a buy signal in the last few weeks. So you got that working on a buy. So obviously we got to use the technicals to determine where to buy. So let's take a look at the S&P on December 27th. You can see here December 27th, it made a closing low on a 60-minute of 24.06 at 2:30. It was below the 60-minute 200, which we like. It was coming from oversold on a 60-minute. Now let's take a look at the daily. Now, so here's that big day, December 27th. Now, this day here, December 21st, we like looking at these days, which are huge down days. This dropped from 24.86 to 24.13, which is 66, which is about a 2.5% drop. Anything over a 2% drop is big. And what is the low of that down day? Right where my cursor is. Here it is, 24.09. So we want to see if it could recover 24.09 in the late afternoon. We like that it's coming from oversold. It's oversold on a daily. This is a big down day. It's below the averages. So 24.09 is a significant level. And sure enough, right here, at 2:30, it's at 24.06. And then it clears 24.09, and it doesn't look back. So some of you got in at 24.09. You're up about 200 points, which is a massive move. On 1 contract, that's $10,000. On 10 contracts, that's $100,000. But let's say you didn't get in at 24.09 on the 60-minute. This is how we like to use the 60-minute. Now, let's say you didn't get in here. There was an opportunity here. This is where sometimes I like to use trend lines. Now, this is a 120-minute. These bars are 120 minutes. So you can see the first point is over here. This is a significant point. It goes up from here to here, so that's significant. This point becomes significant as it clears this pivot high. Now, this point is not significant because it stops here. It doesn't clear this pivot high. So it's important when drawing trend lines to determine which points are significant. This is not a significant point here because it doesn't come far down enough. But this point is significant. If you look at a 60-minute, let's look at a 60-minute. Sometimes it's clearer because we use the 60-minute 200. The significant points you want always below the 60-minute 200. So this point here was below the 60-minute 200. This point right here. And this point here, let's take a look at it. It's January 3rd. So let's look at a 60-minute on January 3rd. You have to be very specific with these trend lines because you don't want to look at them. You don't want to overuse them. Now, here's that point, January 3rd. You see, it's below the 60-minute 200, which we like. We want it to come down, and then it clears this pivot. So this was a significant point below the 60-minute 200. And we want it to clear the 60-minute 200, which is right here. This is the highest point. Then we want it to drop below the 60-minute 200. And again, to clear it. So it actually, if you look at this high over here, was 25.20. It never cleared it here. So this point could have been significant if this would have cleared this point over here. But this becomes the next significant point over here. Clears this point here. Now, let's look at a 120-minute bar. Here's the trend line. Now, we like red bar closes. We like the 60-minute to come from oversold, which it does right over here. It's okay if it's above the 60-minute 200 because this is a reversal. We could break the rules. It's below all the daily averages, and we know it's going to come up. But it's not so high up because it's coming from a bear market. So as you can see, it touches this trend line, closes here. So once it's above the high of this bar, 25.77, it's a buy. So we're long here at 25.77. Some of my subscribers went long here at 25.77. You're up 50 points. So these are the moves in the S&P. You had the 24.09 buy on the recovery of that big down day, and the 25.77 buy on holding of a trend line with the breadth indicator working on your side. Remember, it's very important to determine what makes a point significant on the trend line. You can't just arbitrarily go in and pick points because the cute little line fits in like a puzzle. No, the points have to be significant. They have to be significant support points, and you have to have your definition of what is support. So that's for the S&P. Okay, let's look at some other stuff. So S&P's given us huge moves. Let's go to a weekly chart. And let's look at some of these other contracts. 3 trades on at a time. Remember, max. So we have the S&P trade on. Some of you got long on my signals earlier during the week. Here's the bonds. Nothing really going on in bonds here. Remember, we'd like to buy on recovery of a support zone, which is below these 2 lines, below the blue and the black. It's down here. Even though bonds are going up, we don't have a buy in bonds. ZN is the 10-year note. Again, we have no buy. We want to buy below, but we haven't hit support. Australian is interesting because you could see it's recovered this support zone of 68.11 on this weekly bar. We want it to come down and test it again, somewhere in between the bar. So we're going to be watching the Australians. Recovered this support zone of 68.09 on this bar. You can see it's a big hammer bar. But we want it to come down and test it again for more confirmation. So the Australian has a potential buy. 6B is the pound. No, it's below the blue and the black, but it's got to come down and test support. Let's look at the Canadian. Canadian is just hanging out. We want it to drop down. It came close here. We want it to drop down a little bit more. Let's look at the dollar. US dollar. Nothing happening, consolidating. Next buy point is down here. Nothing to do there. A lot of the times there's nothing to do. We want the odds in our favor. Let's look at the euro. Hanging out here. We want it to come down below here. This was a significant bar that held and tested the 200 weekly. So we wanted to come down and test the low of this bar, which is 112.455. We see it came down. The low is 112.455. So nothing going on there. Now, this is interesting. On the weekly, on the yen, it's moved up, but there is no clear buy, unfortunately. There's just no clear buy. Draw a trend line. See, looks like it's held the trend line, but this is not really a significant point. It just moves up a blip. It just happens to fit into the trend line. This point is significant. This point is significant. This, from my hand, is a significant point. This is not really a significant point, although it appears to work. It just moved up a tiny bit. What makes this significant is it goes above the 200 weekly. What makes this point significant is it goes above this pivot point here and also above the 200 weekly. So be careful with what makes a point significant. But on the monthly, on the yen, as I was looking before, you see this point is a significant point right here, 00901. Right here, it's below the red line. It goes up. We got a monthly close above here. We wanted to see it come down and test it. So we're going to be alert for the Australian and the yen. So we're going to watch that in the future for potential trades. Right now, it's too early. We want to see a test. Let's go back. Swiss franc, nothing much happening. We got out of this position before at break even. There's not much going on here. Gold looks like it wants to take off. It's above the 200 weekly. It's right at this is a 2-point trend line. So, well, that's actually, you can actually draw a 3-point trend line. That's the second point. Coming up to resistance. A lot of people like to sell resistance. A lot of people like to buy resistance, depending if you're bullish or bearish. Downward sloping trend line. High up though on a weekly chart. Very overbought. Also above the 40 weekly and above the 200 weekly. So not the greatest setup for that. Just do this. Chart. This is the 40 weekly. This is the trend line. So it's interesting. We'll wait on gold. Okay. This is interesting. This is oil. I like it. I'm actually long oil here. You can see there's a doji on a weekly. It's come down right below the support zone here. There was a doji on the weekly support. Some of you may not think this is support because it didn't come from above the 200 weekly, but it actually made a significant move here from 55 to 42. So let's look at a monthly. Go back and look at a weekly, I'm sorry. What I like on the weekly is you see there was a gap right here, a big gap up. So yeah, it seems like it's recovering. Oil is so far down, it doesn't fit beautifully technically, but you could see a big red bar over here. And you see how we filled this red bar? So right here at the open of this bar, 51.25, it could be long, which coincides to breaking this level over here. So that's what I kind of like about oil. You can see it went and filled the gap above here, came down, and now it's going look at a weekly again. This is what I like. A big red bar. It's gone above this red bar. It's overtaking the 200 weekly, and it's at the support zone. So that's why I'd be long oil. So basically 2 trades. Long the S&P on the breadth indicator, the recovery of that 2409, holding of a trend line, and long oil based on recovery of the big red bar down, about to break the 200 weekly, and breaking this previous congestion zone right here. Right here. Here's also. This is a big congestion zone. It comes down from here and it takes off from here. So this was once resistance. It becomes support. It's coming above here. It's resistance again, but it looks like it's going to clear resistance. And it's so low down on a weekly. It's so oversold on a weekly, you almost got to buy it. So 2 trades. Don't need more. 2 or 3. And that's it. So that's it for today. And let's regroup next week. Okay, thanks everybody.